put up for you shows you the breakdown of the dry bulk market. And as you can see, pressure shipping is located in two portions of it. One is in the small handy size sector, and the other one is in the Supramax sector. If you look at the next slide, it shows you the current snapshot view of the company. We've got 39 ships. The average age is under 11 years. The insured value is almost $600 million. The book value is approximately $570 million. The total deadweight is 1.3 million tons, and the average size per ship is now above 34,000 tons. The next slide gives you the detailed look at the Baltic Dry Index, which is a measure of the dry bulk market. Now, if you look at this, it gives you a slide beginning in 1985 and taking you all the way to the current position. And as you can see that in the greater portion of the slide, the index has hovered between 500 points and 2,500 points. And only during the very big bull run, which was there during 2004 and 2008, the index has stayed well above these numbers. This is an average of the Baltic Dry Index on an annual basis. And you can see that in 1986, the Baltic Dry Index was at its historical low at only 715 points. If you fast forward to 2012, you can see that the Baltic Dry Index was at the second lowest level ever, the third lowest level ever. And if you look at 2013 on an average, it shows you that we were the 9th lowest in history. However, if you look at the first half of 2013, it was actually the third lowest ever BDI. So the year 2013 was terrible in the first half of the year. Now, this is the Baltic Dry Index, and it shows you the seasonality. Now, if you look at this and look at the first portion of the slide, you can see that more or less every year, starting at the start of the year, the index will come down all the way to past Chinese New Year. Now, this is for two reasons. One is that Chinese New Year is a big impact because China has become the manufacturing capital of the world. And secondly, the holiday seasons in the Western world or the developed world also contributes to a slowing down of demand. Thereafter, the index always goes up and climbs up very smoothly all the way till the so-called towards the middle of the quarter of the first quarter and coming towards the second quarter. At that point, you will see a build-up of iron ore stocks taking place. Thereafter, there is a small short breather followed by the South American grain season. That starts in January, in Jan-Feb. It actually starts in Feb and then continues all the way to June. So you can see that there is a peak there during the South American grain season. Thereafter, the index starts to come down. This is because of the holiday season in the OECD countries in July, August, as well as the fact that there is no grain shipments taking place anymore from South America, and the North American grain season has not yet started. So the market generally comes down in the months of July, August, and September, whereafter it starts to move up, once again based on industrial production in the West starting up, the slow season in China having completed the rainy season, and then the industrial production numbers all keep going up, including the winter demand for coal. And you reach a peak in the fourth quarter of the year. So this is just to show you that what's happened at the beginning of this year has been a fairly normal phenomena. Now here I've given the same thing to you in the form of percentages to show you what has been the increase and decrease in the first quarter of the year. So you can see more or less clearly that in the beginning of the quarter, the market comes down. And towards the end of the quarter, it has already gone back up well above the amount it had lost in the first half of the quarter. Now, only 3 years, 2002, 2009, and 2013, we did not see this phenomena. And the reason for that is the BDI started those 3 years at an extremely low level, and there was no way for it to go down any further. Other than that, it has more or less shown a very clear pattern. Similarly, looking at 5-year-olds asset values, you can see clearly that in the last big recession, 1985, 86, 87, you can see clearly a big bounce back in the year 87. Similarly, if you look at the year 2013, you can see that the first signs of the bounce back of asset values is being shown quite clearly. If you look at the operational costs in 85, 86, 87, the trend was down. However, if you look at the trend line in 10, 11, 12, and 13, it is all up. And this is something that we have to learn to live with. Costs are going to keep going up year over year. If you look at 1-year time charter rates, that is the earnings capacity, you can see again that 1987, there was a sharp bounce back. And similarly, if you look at 2013, you can see in the Capesize sector, it's already showing the first signs of the upcycle. And we think that this upcycle will now continue all through 2014 and 15 and maybe part of 16. So this is where we are at right now. Coming to the supply side, if you look at the supply side analysis, you can see that during the year 2013, what happened? First of all, at the beginning of this year, you can see that we have now 11,000 ships in the sector. Average age has come down of all sectors in the world. Average age has come down to 10 years. The total deadweight tons is 735 million, and the average size is like a small Panamax of 67,000 tons. Now, if you see during the year 2013, what changes took place? So if you look at the last column and look at the figures in brackets, it shows you the percentage change that has taken place during the year in each sector of the market as a percentage of the deadweight tons. So if you look at that, you can see that in our sector we had negative growth. All other sectors there was positive growth. Now, if you look at the forward book, you can see there's 75 million deadweight tons still to come this year, another 45 million tons in 2015, another 25 million tons in 2016, and thereafter hardly anything in 2017. And if you look at the breakdown in terms of different sizes, you can see that the maximum ordering has taken place in the Capesize sector and in the Panamax sector, followed by the Supramax sector, and finally the Handysize with hardly any growth numbers. If you look at the scrapping tables, you can see that 1986 was the highest level of scrapping in the past. And the interesting thing is that the average age of ships scrapped during 1986 was just 15 years. If you look at the scrapping that has taken place in 2012, in absolute number terms, it's maybe 2.5 times what was there in 1986. But if you take it as a percentage of the existing fleet, 1986 we had almost 5% of scrapping, whilst in 2012, as a percentage of the fleet, it was just under 3.5, or just around 3.5%. So quite clearly, scrapping still has a long way still to go to reach the levels that was there in 1986. If you come to the next slide, it gives you the slippage, the difference between what was expected for delivery during the start of the year and the actual numbers of ships delivered during that year. So if you look at that, slippage has gone up in 2013 to 38%. So this is quite interesting. If you come to the next slide,